So a very warm welcome to the BlockW Bigger Pie webinar on crypto and digital assets for good, the ESG agenda, which you know is the environment, social and governance agenda. My name is Joyce O'Connor. I'm the co-founder and chair of BlockW. BlockW is a female-led network whose mission is to help create awareness about blockchain and other emerging technologies, and to promote equity and diversity in its use and applications. BlockW also fosters inclusivity by helping to provide pathways and access to education, training and skills around blockchain and other emerging technologies. Today, we are delighted that you're with us to be in conversation with a group of investors, innovators and entrepreneurs, the Bigger Pie. It's a timely conversation. Last week, there was great excitement, and there was even great excitement earlier looking at the price of Coinbase around the public launch of Coinbase, which holds digital assets for 50 million retail customers and operates in the largest digital coin exchange in the US. This is the largest in a long line of examples of how Bitcoin and other digital assets are moving from the fringes to the main stage. This Coinbase stock-based debut rekindles memories of the web breakthrough. It is now a development that traditional institutions cannot move. For the wider cryptocurrency ecosystem, the Coinbase listing legitimizes the industry in a new way. The benefits of driving value creation for all stakeholders and helping to address the Paris Accord 2030 and 2050 targets, the UN Sustainable Development Goals in the context of ESG goes beyond good corporate citizenship. Tomorrow's strongest performing investments and businesses are likely to be the twin transformers, companies and investors that find new value at the intersection of digital technologies and sustainability. Powered by the two engines of growth, they are 2.5 times more likely to outperform their peers. However, it is not just the right thing to do. This perspective resonates with our panelists today. BlockW is delighted to present this webinar with our partners, the Bigger Pie. And I'll hand you over now to Bridget Greenwood, founder of the Bigger Pie, an organization focused on supporting women in blockchain and emerging tech. Over to you, Bridget.
Thank you very much, Joyce. And thank you, Saoirse, for initiating this collaboration. I'm really pleased to be here. As Joyce said, I'm Bridget Greenwood. I'm the founder of the Bigger Pie. So if I tell my story about how I got into the industry and how I got excited around Bitcoin and blockchain and what led me into the Bigger Pie as sort of one story. I had been told by two groups of friends in 2016 about this thing called Bitcoin. In 2017, I still hadn't figured out quite how to purchase it. So one of my friends said, look, if you send me some fiat currency, so that I was honestly wondering what fiat currency was, because that's not, again, something, having been a financial advisor, the word fiat currency never came up in my history. And set up a wallet and sent over some BTC, which was great. And then he said, by the way, I'm looking at doing a startup, helping people to do this more easily, going from fiat to crypto, crypto to fiat. Would you like to join me? And at the time I had been running my own business. I wanted to be part of a team, and I was very excited about the technology that would go forward. And so that was brilliant, because once I began to sort of hold on to some crypto and have that visceral experience of actually holding some, then and then being part of the ecosystem, of course, my knowledge, my interest meant that I went on a steep learning curve, as many of us do when we first come into the industry. And I was really excited to look at Bitcoin in terms of what it was trying to do. But in terms of where I am with the Bigger Pie, it was obvious when we had a look around that there were plenty of men in this new space, but there was a bit of a lack of women. So I did some research, and the women in the space are amazing. And I'm not saying that the men aren't, I just didn't do the research on the men. The women in the space are amazing. They have career histories that just look fantastic. They have multiple degrees, speak multiple languages, are pioneering in their space. and they want to put their hand out to help the next cohort of people coming into the industry. And I was really, really impressed and wanted to spend more time with these women. So one of the things that I asked them, is there anything that they wanted to do in terms of support as being women in the space, being able to connect with other women in the space? And the answer was yes. So I sat on that for a little while. Veronica was one of the first women that I met in the space and continues to be here. And she's also someone who I admire greatly, as do the other women we have on the panel. And so then we formed the Bigger Pie in 2019. And it's really about the community, about being able to bring leaders and learners together to be able to help expand their network, support each other, learn together, discover opportunities together, find people for your opportunities. And we're really excited about what we're going to be doing in 2021 and lots of collaborations. So thank you very much for inviting me. And I'm glad to have Davina and Geneviève, who are also coming from the Bigger Pie, to share their expertise, although Geneviève might be a little bit quieter today because I understand she's not feeling very well. Saoirse.
Thank you very much, Bridget. And indeed, thank you so much, Joyce, for the introduction. I've been a member of both the Bigger Pie and BlockW since 2019. And across both groups, I've seen crossover in terms of membership, but also I've learned so much. I have met so many fantastic people. I have had business opportunities from both groups, and I continue to be completely inspired by the people in this group who also just happen to be women, which is fantastic. We also have many women champions within the group who are present here today and coming out in force. And thank you to all of our audience who are here. And there's been fantastic engagement across social media and email and indeed WhatsApp. Thanks, Brian, and your wife for texting in. It's been really interactive over the last few days. So delighted to see the engagement and indeed the interest in this particular subject. I guess for me, one of the most important conversations to emerge from Bitcoin and crypto is the focus on energy consumption. It has quite literally tied energy consumption to the monetary system in a way, speed I could never have imagined. When we open our wallets, those are the physical wallets now, to pay for something at a supermarket or an online shop, do we think before we pay, what is the energy consumption and environmental cost of this coin or note before it actually reached me? Do we think about the waste disposal of the fiat currency at the end of its life cycle? When doing online shopping, or do we think, how much energy has my laptop or my phone or my tablet used today, just browsing shopping sites even before I click add to basket and checkout? And then how much energy is consumed from the next step of purchase transaction through to order acceptance at the shop, warehouse, and the carbon footprint of ocean shipping, flight, road transport, cargo, etc. And the truth is, we don't, but we should. The invisibility of the negative externalities attached to the existing monetary system and indeed consumer and corporate systems is enabling all of us to passively degrade our planet. And that's E for environment from ESGs. What can we do about this? Better transparency, trust, accountability, visibility, that's G for governance. Of the negative externalities that we don't currently see, blockchain and peer-to-peer networks are part of this solution, but we, humanity and society, S, our behaviors are the most important part. I recently posted on LinkedIn that the existing monetary system facilitates approximately $47 trillion annually of criminal activity across just 5 criminal activities. This does not stop us from using fiat cash or from using our credit cards every day that are part of this 47 trillion money system. We, society, passively accept this as a negative externality of the current monetary systems. So back to value and what we value and what we decide is valuable to use energy on. Mining for gold, metal coins, printing paper, fueling deforestation, mining metals and surging plastic pollution through billions of credit cards in circulation each year, 70-inch TVs in our homes on standby with dozens, if not hundreds of other devices 24/7, Christmas tree lights, endless hours of trawling TikTok, YouTube, Twitter, LinkedIn in my case, and investing in non-fungible tokens, NFTs for art or fashion. Our conversation today is with a panel of who I would say are some of blockchain and crypto's most established professionals, and who also happen to be women and true ladies at that. So ladies, let's get to know you all and your path to blockchain, crypto and NFTs, digital assets, and how important the ESG agenda is to you and your business. Are you a crypto person adopting ESG or an ESG person adopting crypto? Veronica, we'll start with you.
Hi, Sorcha, and hello everyone, and thank you for having me here. That's a tough question. Am I an ESG person or not?
We'll get to know you first and then think about that as you get to the end.
You know, you put me in a corner there.
Answer later on.
Yeah. So my involvement in this space started somewhere in 2015, and it started with Bitcoin. And actually, I was attracted to the whole idea of Bitcoin because of after reading the white paper and because of what it was saying, talking about financial inclusion, about, the ease of transferring funds across borders and all the other things that people that have read the paper or throughout the years are familiar with. Although part of me was a little bit debating those things because I'm also aware of the fact that things don't change. They start with a good intention. They don't always end up in a good place. And I'm not talking about Bitcoin, I'm talking in general. Anyways, about me, I started investing. My background was totally different in management consulting before that. Initially, I started investing my, let's call it spare cash. And then I moved into this industry full time. That meant that I've started investing in startups and in other, blockchain companies. I've started my own mining operation. And actually, I know the whole argument about the energy consumption, but for me personally, it was an experience that I had to, to actually feel hands-on, if you wish, because it's quite a learning curve. And I'm a firm believer in if you talk the talk, you walk the walk as well. So might as well learn practically. Ever since that time, I moved on through other roles, such as being one of the founders of a cryptocurrency hedge fund. To be honest with you, not all banks or, not everybody was so happy or open towards a cryptocurrency hedge fund back then. And then the push was more and more towards quite traditional fund structure, which we did achieve, but ultimately it did kind of disappointed me in a way because it didn't really fulfill the scope that I had in mind initially. So I've left that. And right now I just manage a family small portfolio and alongside my husband. And that's it pretty much. That's my experience in this space. I have invested in some companies that are doing quite well. One of them is Novum Insights, and then in some other companies in esports, in gaming, and all sorts of other things like that. But yeah, that's it pretty much from me.
There's a lot in that's it. It's a great introduction, Veronica. And I was reading Novum Insights derivatives post email today. If you're not on their newsletter, get on it because it's quite educational if you don't come from a financial services background, or indeed if you do. And it's interesting. One of the points you made, things don't always change, but at the same time, do they stay exactly the same because of the environment, because of the people involved, because of the economy, because of the political situation? There's always an element of change, I hope, and that's what I'm optimistic about, particularly in both the ESG and in the cryptocurrency and blockchain space. And as you say, it's a learning curve, and that's why we're here today, because anyone who says they're an expert in this industry, you have to question it. None of us say we're experts because we're learning every single day. We're on that journey. Davina, delighted to have you here. Please introduce yourself.
Hi everybody, it's a really real pleasure to be here. So my name is Davina Paul. I am an angel investor. I am co-founder of the angel investment syndicate Galvanize Capital. Through Galvanize, I sit on various boards as non-exec director or advisor. I'm also trustee for the Centre for Youth Impact and an organisation called Regenerate, which is focused on the growth of the purpose-driven business ecosystem and how we can accelerate. As well as that, I also take on various kind of portfolio CFO roles, and one of my biggest projects at the moment is with a non-custodial crypto wallet called Zumo, who are based up in Scotland, and we are really focused on our net zero agenda. We have our head of sustainability, and obviously being based in Scotland, we've got COP26 happening later this year, so it's really front and centre for Zumo at the moment. So it's this is a really important session.
Fantastic. We'll be looking forward to your insights from COP27 later in the year when you're there, Davina, on the ground. And we also have Geneviève Leveillé in the audience, but cannot participate on the panel due to illness. But thank you for showing up, Geneviève. And just to give you a quick profile overview of Geneviève, she's principal founder and CEO of AgriLedger, based in Jersey. She is mentor and subject matter expert on blockchain for social impact collation, advisory board member of Investors Box. She is co-chair of DLT Working Group Tech UK, and was a member of the Government of Estonia Advisory Group for e-residency program, a fellow of Startup Leadership Program, and also spent many years in the financial services industry in product solutions and delivery, operations services, General Electric, Bank of Scotland, etc. So Geneviève, please do put your questions in the chat box along with all of the audience. We want this to be an interactive session rather than you all just sitting looking at us. So please challenge, please put your thoughts forward, and let's discuss it as a panel. But over to the first question. How has the rise and fall and the fall and rise of crypto and digital assets shaped your business or investing behaviors, or indeed your outlook on this new vehicle of the monetary system? Bridget, we'll start with you.
Thank you. Well, as I said before, I've been in the space since 2017. So we saw a big cycle of increase going up. A lot of what were called ICOs then, a lot of money was easily raised for a number of projects. Some had some business sense behind them. Some were just scams, and some were ideas, but the people who were behind them didn't have the capability of being able to deliver on their ideas, I guess. And then I've seen that drop down. So the price going up to 20,000 at the end of 2017, and then sort of back down to 2,000. And the noise in the space sort of got a bit more quiet. And in that time, we have people like Veronica and Geneviève who were still building because they had seen the promise that technology could bring and were sticking around for the long time. And with this next wave that we've seen of this, the rise of prices going up and therefore the rise of interest. I mean, last time it was everyone's heard of Bitcoin now. I think this time is everyone's heard of NFTs. You know, we've really seen a lot of institutional layers laid down. And from what I understand, the cycles before that, similar things have happened. So the retail market is quite well looked after if you want to get in, you know, the issues I had in 2017 have definitely been removed. So that's been really fascinating. In terms of my investments into crypto, I have sat with not enough spare cash to be able to take advantage nearly as much as I would like to have done at all in terms of being able to purchase when the sale, as people sometimes call it, the sale was on. But in terms of the business, what it did allow me to do is really the people that we met in the industry and the women in the bigger pie. I see most things in this conversation will be through a gendered lens, have been extraordinary, and their abilities to have their vision, to see the future, to be collaborative, because when you're working in a new space, as you said, we don't have all the answers, we don't have best practices, we're still discovering. So that's been a really enjoyable journey for me. And in terms of ESG or crypto, when I looked at Bitcoin and when I looked at why was it created, what problem was it trying to solve, how well has it got to solving that problem, that's when you discover really I wasn't nearly as aware of how many people are unbanked. So I think the official figure is like 2 billion, but that's head of households. That's not actually how many people are excluded from just being able to participate in an economic way. So for me, it's really the humanitarian side of things that brought me in and kept me in.
Mm-hmm. Fantastic. And the humanitarian aspect of blockchain and Bitcoin, I've only started to really get into over the last couple of years, because my own first interest was in the financial and fintech application, but also the supply chain and transparency, trust across the entire supply and value chain. But the retail market has really been driving this, because I saw a figure recently, and I'll share any resources that I say in terms of the facts, so you can always fact check me, that only 78% of institutional investors have said that they will commit to investing in crypto by the end of the year. And yet it's at 5 trillion. So who's behind it? It's individuals and curious investors and miners, etc. Davina, over to you.
I think that word curious is probably quite important, actually, in terms of my answer. And I know in terms of, Zemo and who are our customers, actually, they are either the people who are kind of, have been in crypto for a long time and are looking for a non-custodial wallet, or they are genuinely the crypto curious, and that's, a lot of, and the important piece there when you have people who are less au fait with it is that education piece, because of all the, there have been obviously the scare stories you mentioned, actually, fraud is always pointed to. The dark web is always pointed to with things like cryptocurrency, and these are, these are things that are happening through traditional currency. So it's kind of, it's making people feel safe and secure and understand that actually, this isn't a one coin or any of the other kind of pyramid schemes that we've seen. And actually there is a use. So I think what's interesting is each big story, it kind of validates the industry, actually. When a couple of months ago Tesla piled in, you've obviously got MicroStrategy, we've just had the Coinbase IPO. Each time things like this and large events happen, it's just increasing that awareness and that accessibility and the legitimacy of the industry, which I think is really, really important.
Absolutely. And again, the curiosity is what's going to continue to keep us learning on every day and engaging in events and networks like BlockW, the Bigger Pie, and other groups in this industry. And Veronica, on to you, same question. How has the rise and fall and the fall and rise of crypto and digital assets shaped your business and investing behaviors, both from Bloomwater and onto your current focus?
In Bloomwater, actually, we had just our capital up to the point where I came out. So we didn't get to the point of actually, getting new investors. COVID came and things happened, and that's when I said I parted ways. However, on a personal level as an investor, well, it was a ride, It was pretty much a ride. It goes up and it goes down, and sometimes you go up with it and sometimes you burn and crash with it, and that's it pretty much. It matters a lot, what you have done. It's pretty much like it's just as in stock market, for example, because ultimately you can invest in many companies, but how many of them will be successful? How many of them will you be able to be spot on and say, I mean, I don't know an investor that says, I invested in 10 companies and all 10 companies have become, unicorns or something like that. So you win some and you lose some. why you lose them, it depends a lot, to be honest with you. It's not, I usually try to stay away from terminology such as scams and so on, because then I would have to think, so what about all the startups in any other industry, to be honest with you, that failed? 90% of them were those scams? Not necessarily. We don't hear a lot of stories about those companies, why they fail and what happened and so on. Cryptocurrency being in the spotlight, yes, you hear every day of something or the other happening. I'm not saying there are no bad actors, but I think that bad actors are everywhere, not just in this industry. They are across the board. People who would want to take advantage of other people will always be there. And in terms of my asset holdings, some have performed quite well and some haven't. I've actually, you have to have strength sometimes in terms of holding an asset and seeing it devaluing quite a lot, only to be surprised, let's say 2 years later, and then making good money out of it. But yeah, it takes a lot of strength to be able to do that, because initial instinct is, most times people actually buy on the way down. They get scared and they will do that. Now, for me, maybe, although this is my livelihood, I guess having a diverse portfolio and putting your money across, from equity to just pure cryptocurrency, it's what makes a difference. I am not a trader, and I don't believe, I call myself more as an investor, simply because I don't day trade, and I don't believe that it's very efficient, especially in cryptocurrency. You can lose a lot of money if you don't know what you're doing. So I don't profess myself as a professional trader or anything like that. So I prefer to just invest and buy and hold, actually participate in this ecosystem, support companies to build something for the future.
And it's still a growing entity, a vehicle that we're getting used to in terms of what it is and what it's going to become. Because Bitcoin, and we're not just going to talk about Bitcoin throughout this, we're also going to talk about NFTs and CBDCs, digital assets and natural assets. But the fact that Bitcoin has no CEO, it has no bylaws, no board of directors, no office, no marketing, no HR. Bitcoin is not a company, it's a network. It is a network of miners who secure the network, a network of nodes who validate the integrity of transactions that flow through the system, a network of volunteers, developers who keep the software running. And despite being an entirely voluntary network, has run for 12 years with only 2 downtimes in 2010 and 2013. I mean, it's fascinating. It really is. And as you say, Veronica and Davina and Bridget, there's ups and downs, but you've got to be in it for the long haul. If you're shorting all of the time, then it's a different type of trader behavior or investor behavior indeed.
But to be honest with you, you will make at that level and that kind of trading, usually you have to be an institution to make profit out of that. You have to play big money. What I like about cryptocurrency is pretty much the fact that, you have a low entry point. You don't have, and I'm not talking on Bitcoin necessarily, okay? I understand that owning one full Bitcoin is expensive at the moment, but ultimately it doesn't mean that you can't buy a small part of it if you want to. But also the fact that you can go out there and find, whether it is art or whether it is assets or tokens or whatever it is that you wish to get yourself informed and learn about and invest, you have a low entry point compared to the kind of, let's say, procedures or processes that you have to go through in order to open a brokerage account if you want to, or the fees that you need to pay, or it's a whole thing. I've done that too. So, I haven't been a broker, but I try to trade through a broker, and it's a tedious process. Not everybody's going to do that. But right now there is still an opportunity for people to learn more about it. And actually, why not? Why is it that investment has to be only for the few?
And like that's going to feed directly into my next question on the financial inclusion side. But if you're relying on somebody else's opinion and intelligence and background to make a decision for you in terms of what you invest in, then you're inheriting their bias. So you've no idea where they're getting their information from. And you're trusting in that, you're handing over that power. So this is the first time personally that I've seen and I've a decade's career in Treasury, that the onus is completely on me and I have to be an adult about this, where there's always somebody else to blame in other types of investments, which of course also serves its purpose if I'm looking at my pension in comparison. But hopefully I'll become more skilled in managing that as the years go on. I guess that as you say, Veronica, feeding into the next question was, what is your opinion on crypto, etc., versus the existing monetary system? And you don't necessarily need to focus on energy consumption, proof of work versus proof of stake. You can focus on peer-to-peer versus centralized, financial inclusion. And should, in your opinion, crypto replace or enhance the existing monetary system? We'll stay with you, Veronica.
Sure, thank you. If we go back in 2008, then we will see that, we'll find out that Bitcoin actually was born just out of that lack of trust in current financial system and the way that big institutions are using people's money and what they're doing with it, and the whole financial crisis and so. I am not, in terms of, okay, so money has gone through changes throughout history. It's a proven fact. Yeah, you like facts. so it's proven. All you have to do is just Google it and you'll see through, people used to be, in Roman times, soldiers used to be paid in salt, actual salt. And then you had gold coins or silver coins and all sorts of other metals. And then you diluted those metals, you combined them with other metals. And then eventually you had only, I don't know what, they were copper or something or the other. So money has, throughout history, followed this cycle where it changed constantly. So I don't see it, whether we believe it or not, but we've always replaced one form of money with another. And for example, when the whole world gave up on the gold, let's say attachment of money, what did we do? We actually believe in money, but what do we believe in a piece of paper? Or even now, if you think about it, how often do you use cash? You believe in a number that is shown on your screen, or that your bank tells you that that number is there. So it's a bit like, this is it's a natural cycle that money will change in time. Why does it happen? Well, usually because we have innovation, because we are dissatisfied with something or the other, and because we tend to want to improve it. Now, whether that works out well or it doesn't, that's a matter for the historians to kind of analyze, go back and see what went well and what didn't with all these changes. And I think that this is the same thing happening right now. Maybe it is time. And I think it is time, and to kind of change how some things work. And maybe it is time to have more, to have digital money. Whether it is cryptocurrency or whether it is a stable coin or whether it is a whatever token or a government-backed or issued coin, that is to be seen. And do I believe that governments are going to just ignore this and they're not going to come up with their own coins? No, I don't think so. They will do it for sure. But will that mean that you won't have anything else besides it? No, I don't think so. I think that it's pretty much building an ecosystem where everything works together, where you can easily interchange from one thing to the other. Maybe it will be easier to, governments and central banks are catching up to the fact that, wait a minute, what if doing this is easier to transfer funds? What if it's easier, it makes it easier to make investments overseas? What if it makes it easier to pay people or whatever? What we have to be careful of, to be honest with you, it's not just a cryptocurrency or digital asset or whatever kind of coin that governments or we want to use. It's the governance part of it, how we manage it, what we do with it. Do we make it fairer or not? Do we have more accountability across the board and we have a say in how that is managed or not? And that's where my pain point lies. Because if you're, you're replacing my pound, my British pound with e-pound or whatever you want to call it, okay, but what is the supply going to look like? Are you going to have the same behavior, inflationary behavior over time? And now you don't even need to spend money on printing. All you have to do is just, change the number on the ledger saying, oops, no, we don't have it. We're not having this supply. We're increasing it by another 2-3 trillions or something or the other. So governance is what matters after all. How we are doing it. Do we give more power to people? Are we making it fairer or not? So I don't think that they exclude each other necessarily, fiat and cryptocurrency. It's more of an evolution towards, and I feel like maybe a competition. I feel maybe that's what governments and central banks need, competition. Competition drives innovation and improves things. If I have a better option of using another currency, why should I use pound? If my currency, digital currency, it's accepted wherever I want to buy or whatever I want to do, or I have a way to exchange it so that I can derive value from it, then I will do it. Why? Because it's fairer, because it's easier. And ultimately, we are in this whole internet age and, Internet of Things and whatever, AI and whatever else we're talking about, quantum computing and so on. So we want things faster, better. But we have to always remember that things should also be fairer.
And that's where the options side comes into it, because the more options we have, the better. And go back to the very beginning of the history of the money system, it began with bartering. And we still have bartering today. It's not replacing one thing for another. It's just adding more options for people to use, more suitable vehicles for different types of transactions and activities. Davina, what are your thoughts?
So
I
think
the existing monetary system versus.
I think Veronica's raised some really important points, and I know from the research that we've done, actually, probably some of the most suspicious people in terms of being suspicious of the existing monetary systems are millennials, and they're also, really interested in crypto and operating in that space. I think, democratization is such a key pillar of crypto, and it's also, what was also really important in that is, the technology that underpins it, the blockchain technology, and how that doesn't just democratize banking, but it has the potential to democratize other areas of, whether it's logistics, tokenizing data. I know obviously Geneviève does loads of work in terms of, with farmers and, looking at provenance. So it goes, we have this system and this technology now that just goes beyond banking and allows us to democratize all areas of our lives, which I think is really, really powerful. I think that it would be interesting, so many governments are now picking up the baton in terms of bringing out their own digital token. Rishi Sunak announced a working group, I think yesterday or the day before yesterday, for I think it's called the Bitcoin, I think, in the UK. But yeah, so I think what will be interesting is actually you spoke about that centralization versus decentralization, and with the government coin, actually you are then going away from the decentralization of crypto. So how people will adopt that, especially real kind of crypto believers, there may be some pushback there, I think.
And also what it means for the banks and what their purpose and how they add value. If they're no longer printing the money, if it's a digital currency coming directly from a central bank. So how they redefine their purpose in this entire evolving economy will be very interesting to watch over the next few years. Bridget, over to you. Crypto and cryptocurrencies versus or with the existing monetary system.
Yeah, well, I think it's very important to understand about what makes Bitcoin unique, why it was so revolutionary, why it's very different to a centralized CBDC. It's permissionless. So we've spoken about being centralized or decentralized, and we know that Bitcoin is decentralized and it's permissionless. So as long as you can get access to the hardware and the software that you need, you don't need to prove that you are who you are. You know, you can start to either mine. Obviously, that's becomes more difficult as the longer Bitcoin goes on for, but you can choose to be paid from it. And this is really important. We mentioned before about the 2 billion unbanked, but it's more than that. The government adopting a coin doesn't solve any of those issues. All it does is it takes the fiat system and makes it more efficient by putting it onto a coin. It also, in terms of the governance that Veronica mentioned, means what now can be tracked, because where we spend, where we go, where we are, our spending habits will reveal all of that. So there's a very big difference between what Bitcoin is looking to do. There's a very big difference between that and what governments are looking to do. And whilst they might be all be digitized now, they are very different services, very different offerings. And going back to Veronica's point as well, when I've gone down this journey of understanding about Bitcoin, understanding about the history of money and progressions that we have, money's just a story. It's just a story that we choose to buy into. And what I see are more options to which story you choose to put your beliefs in and your systems in.
That's an interesting point to lie on, and I'm going to really think about that. Money is just a story, and you're going to hear back from me about this. I guess I want to make sure that we leave time for questions and answers at the end, and thank you everybody for feeding your questions through. I've been giving some responses in the chat there, but we'll get to as many as we can towards the end. But we want to leave time for an important element of this conversation, and that's the ESG context. And does putting a value on nature, in fact, devalue it? One of Kate Raworth's donut economics arguments is exactly that. But how do we protect our environment and our ecosystems and nature if we don't put a price on it? Is that the only way to save ecosystems and allow them to regenerate by putting a price tag on them? Look at Single Earth, who have created the stock exchange for nature with the intention to trade tokenized natural assets via their marketplaces. So these are boglands and wetlands and forests and marine protected areas. Very interesting project to look at, and happy to share resources on that. And then Ralph Chamay, I hope, who's in the audience there, we were speaking earlier, who's an economist at the IMF, has calculated 20 million value on the lifetime of a whale for ecosystem services like carbon sequestration, etc. Should this be tokenized? And I think Waleed and Rebalance Earth are also looking at this. So that's a few examples of different blockchain solutions and tokenized natural assets that are in development over the last year or so. So to our panel, how are Bitcoin, crypto, stablecoins, CBDCs, NFTs, asset tokenization, et cetera, being used to address Paris Accord 2030 and 2050 targets and the UN SDGs in the ESG context? Who wants to go first? Bridget, you're smiling.
So for me, you opened up with saying that we're passively doing damage to our environment. And technology has allowed us, and you also spoke about investing and not having to think too much about the investing that you're doing. And for me, technology has allowed us to have more and more convenience in our lives without having to worry about what the consequences of those conveniences bring. And what I would love to see this technology do, Vive does some great work as far as I'm concerned, looking at this, is she helps smaller farmers to be able to get into the supply chain and to be able to have opportunity to get one, to be able to serve at supermarkets that they wouldn't be able to do on their own, and two, to get a fairer share of what's happening. And as we look at responsible consumption as being part of what we should be doing in terms of where we spend our money and how we spend our money, and the supply chain that goes into that, then I'm really excited about how the supply chain particularly can allow me to say, if I'm going to buy a cup of coffee, I can easily know that when I buy this cup of coffee, the planet hasn't been unduly harmed. Children haven't been involved. People have been paid their worth for this cup of coffee. And the container that I'm having it in will not be damaging the earth, and those, to have to make that decision every time you buy something, we can't do it. You can't know that. You can't say, I'm going to buy a more expensive clothing brand because I've heard that Primark use children in their supply chain, because so do the really expensive brands. So I'm really excited from a consumer's point of view to be able to much more easily and conveniently make purchasing decisions and be responsible in the consumerism, and so that I can positively impact in my daily buying habits rather than passively destroy.
So taking back that power. Excellent. And Davina, over to you.
So I think it's like I said before, it's really front and center for me and the businesses I work with at the moment. And I think recently they've launched the Crypto Climate Accord, which is saying, and I think their message is really interesting because they are focusing on this industry and saying, yes, we know we are energy consumptive, so what are we going to do to fix it? And that's kind of transitioning towards 100% renewables, collaborating with the industry and the blockchains, and they've got really prominent businesses signed up to that. So I think people like Ripple and Consensus are signed up to that. So I think initiatives like that are really important. You're seeing these, really crazy technological solutions. Where I was listening the other day to a podcast, and they were talking about harvesting the energy from flares off oil rigs to actually power nodes. So there's some really exciting, innovative stuff. I think I was listening to Tony Fadell the other day, who is an ex-Apple exec, and he's also a really prominent ESG investor. And he made this point around actually, even though, many of us are very focused on sustainability, but now it's such a hot topic, especially with, SPACs and, other investment vehicles. It's really hot. And why is that? It's because finally there is an economy growing around it. And that's kind of what's made sustainability a really hot topic right now, because there's this economy growing. And I think what's interesting about our industry is that you've got the sustainability side, and on this side you've got, let's say, the mining, and the miners are looking at cheaper, more renewable sources of energy to raise their profitability. So in the end, what's happening, which you don't really get in many industries, is that the profit side and the sustainability side are moving together to coalesce. So that's really exciting, I think, about the industry.
And how profitable can an organization be if they're not internalizing their negative externalities, because they'll be completely exposed by this over the next few years? And in the UK, by June, when all financial reporting has to include climate and an ESG, SDG targets and achievements. Veronica, over to you. What is your view on how Bitcoin and crypto and asset tokenization are supporting the UN SDGs and the ESG agenda?
So, as Davina already mentioned, it is in the best interest of Bitcoin miners to move towards renewable sources of energy. And you have like really, really large operations that actually run in places, in cold places or near water, or in, all sorts of solutions like that are already used. This is not something new that is happening just this year. It's been happening for some years now. So that's from the mining side of things. There is obviously, you look at Ethereum and then you see that they are, moving towards proof of stake, and I don't think that there is a problem with proof of stake per se. It's more about, again, we go back to that whole point of governance, and it's in how many nodes you have, how distributed or decentralized they are, what kind of voting power they have. Is there is there a possibility for collusion, or, ultimately for me, that is corruption. So you defeat the purpose. So you have to be careful what you do when it comes to proof of stake. In terms of other things I could mention, there is a project, ecocoin.com, for example. That's the link, and it's a coin that practically you earn coins through sustainable actions. So whether you eat a meat-free meal, you switch to a green energy provider, and that's at a low level, at an individual level. What I feel, there is this whole, with this talk about climate, a lot of responsibility has been thrown on the shoulders of consumers, of people like you and me. And I think it's slightly unfair. Why? Well, first of all, we were bombarded telling us that if we buy things, we become happier. Then we were told that if you buy things, now you're happy, but now you have to be miserable because you just destroyed the planet. Then you look at things like that they are, I'm kind of surprised, because I feel when reports come out, there is a lot of, if you buy something, a coffee or whatever, and it has a plastic straw, you killed whales and you killed fish and you destroyed I don't know what. I'm telling you this. How many reports actually say most of the whales and the collateral damage that happens in our oceans is due to fishery? And how many people have that conversation? How many people go and knock on the door of big industries, of big companies, and tell them, you have to be more transparent because I don't know what I'm eating. I didn't know that my farmed salmon has, artificial color in it. I didn't know that in order for you to catch, I don't know how much fish you're killing. I don't know how many whales that actually, they clean more carbon dioxide than the Amazon forest. And all of these things. So maybe it's not just a cryptocurrency or asset tokenization. I don't know if just tokenization is the answer. I feel that it's more the technology that is the answer. It's the whole principle of transparency, accountability that matters to me. So I would like to see this technology going much, much further than what it is right now, and being adopted at a much higher level, so that the big players who are actually responsible for a lot of this damage are more transparent and accountable. And then you can see actually what is going on. Then, as Bridget says, you can make your informed decision on what you purchase and what you do, what you consume, what you buy or what you don't. Because after years and years of indoctrination of buy more because you'll be happy, then to be told, well, it's your fault. I find it a bit hypocritical, in my opinion. So I don't like hypocrisy. So I feel like I try my best as a normal human being to do the best I can, to, not to buy useless things, not to, trying, okay, I'm not going to eat fish. I'm not going to do this, I'm not going to do that, but ultimately I have to live as well. And this is the world that I'm living in, and I want it to be a better world. But let's all contribute to it. If I contribute in my small way, and Bridget does, and Sorcha does, and Vina and so on, that's great. And there is power in numbers. But ultimately, if all of that is undone in one fishing session in the ocean, then what have we changed, or what have we done exactly? So whether we tokenize forests, or whether we earn coins because we perform sustainable actions, and we buy more sustainably or consume more sustainably, that can help. But I think that we should also be honest about whose responsibility is as well, because it doesn't lie just with the consumer, or the planet is not destroyed just because of Bitcoin miners, or none of these things are happening because of the small people really.
And the key thing is that the narrative out there in the media tends to suppress the individual as the problem, whereas actually we're the people that cause the change, because we drive governments to write and rewrite policy, and then those governments govern the corporations that are causing these negative externalities. So it actually does start with us, but not enough people seem to know that, or where we are in the change policy. cycle. So I posted about that recently, and I've got resources I can share on that too. But the main point there is changing us not from consumers, but to contributors. And that's another one of Kate Rayworth's donut economics theories and suggestions. So again, if people have not read this book yet, please do read it. And it's not just for economists, it's for absolutely every single one of us, and one to read. We're getting into the last few minutes, and we have plenty of questions here in the box. And for ones that, geotagging nets, Paula, that's fantastic. I love that. Interesting discussion. Trevor, I did see your point earlier on, and I think that somebody addressed it. It was Davina, actually. You mentioned that it's the millennials and the younger generations that are, let me find the question, are being influenced by social media in terms of where to invest their money. And is this a good thing? And obviously, we all know the good, the bad, and the ugly of social media. So who would like to, Davina, you can jump in on that. What are your thoughts about how we address that?
Yeah, I mean, I think it is a problem, and I think it's the regulators that are trying to help that situation in terms of that step of being able to purchase crypto and putting that layer of we have to apply for an e-money license to give people that safety and security, and make sure that we're compliant, and make sure that if anything goes wrong, there is somewhere to go. You won't lose your money. And I think that regulation piece then becomes very important for retail, for the millennials buying cryptocurrency. But I guess it goes back to, there are whole loads of, Google AdWords links that link you to, traditional investments that maybe, I think there was a guy recently, I think, was it the Grand Designs guy, got into hot water because he was linked to an investment opportunity that people had found on Google or something, So I think that level of exposure in terms of social media, I think that it's not just a crypto problem, but I think hopefully regulation can avoid as many people getting burnt as possible.
Mm-hmm. I think.
Go on, Bridget.
Thank you. I think that there is, which Veronica touched on as well, regulation is there to protect the consumers, but I would love to see a regulation that allowed some level of being able to have opportunity to be able to invest and take some responsibility, and get in at things that are younger and have that opportunity, which, in the highly regulated world, we can't. So a small amount can go a long way. If it's a small amount that you can afford to lose, then, you might lose all of it, and you need to be good with that. But it's also an opportunity to have a punt at something. But I do think the idea of having an investment opportunity for people that is open to more people, that's what I liked about what happened in 2017. The way it was managed, the people who are out there to behave badly, yes, but 100% we need regulation. But I'd like to see a balance in that regulation.
Fantastic. Well, thank you to our audience. We're bang on 7 o'clock now at GMT and Irish time here. And we've loved your engagement throughout the session, both on LinkedIn, through the webinar here, and the WhatsApp has been flying as well. So we'll have some follow-up content coming up after this event. And please, to the people that we didn't answer the question specifically, I think we touched on most of the points, but if you want a more specific answer from any of us, I think we're all in agreement. Please feel free to reach out to us directly on LinkedIn, Twitter, Clubhouse, any other way you can find through the airwaves. It's been an absolute pleasure being here with you all today and hearing from Bridget, Davina, and Veronica, and Geneviève. Next time you'll be out in force and feeling better in the Congo, I hope. And Joyce, thank you so much for hosting us, and thanks again to all of you.
Thank you, Saoirse, for inviting us. Thank you, Joyce. Thank you, everyone.
Have a great evening, everybody.